So we are of the view, if this kind of situation is coming forward, so there will be a large traction will again start coming basically on this sector also, because the people really fear, and as well as the the lenders are also of the very clear view now, unless and until all these clearances are there in place, so they are also seems to be reluctant to come forward and fund basically these kind of projects actually.
There's a lot of buzz in the market, Mr. Patel, that you have indeed, or rather about your stock also currently in the market, and the fact that you have transferred your stake in the Mumbai Expressway for 72 odd crore rupees. How is it that you are planning to use the proceeds right now?
See, exactly, that basically the Sadbhav Infrastructure was owning 20% in Mumbai Nasik, and for that stake actually company has invested 10.2 crores basically in the year 2006 actually. So that has been divested because it was a minority stake of 20%. So we have decided to exit from the same. And we got a 72 crores, that is a 7x, and the usage basically is to reduce the obligation, the debt part of the parent at Sadbhav Engineering level, and it has been already used, and some of the debt has already been parred by the company actually.
For the viability of the road sector, the most important ingredient is funds. You need fresh inflows. One way is government allocation, which has come from the budget, which frankly is not large. Second is NHAI is raising money via the tax-free bonds. But whatever money NHAI currently is raising by tax-free bonds, do you think that is sufficient enough to take care of all the fund requirement?
See, two, three things. Obviously, the number of projects are large actually. Apart from budgetary support and tax-free bonds, what we understand as basically, and we are seeing basically some of the quite large activity at NHAI level, that they are now basically in the process to divest some of its projects, because currently I think around 104 toll projects are owned directly by NHAI. And if they start monetize that, obviously NHAI will start getting the large amount of funds basically for these projects, because all these are the completed projects, and this can be again utilized for the purpose of development of highways. And apart from that, what we are seeing that the out of the budgetary support or the basically this bond issuance, whatever investments is being made by NHAI, the partly for hybrid annuity or EPC, so all these assets is being created. So tomorrow at a later point of time, when NHAI will continue to basically toll these basically highways and these projects, so obviously they will also continue to get some revenue out of the same. So it cannot be zero revenue. So obviously, but to support the sustainable growth, the various sources is to be evaluated at the government level, and I think the government is basically on the right track, and they have to step ahead of what the basically companies, developer like us are thinking actually.
Okay, Mr. Patel, we'll leave it at that. Thanks so much for taking the time out and joining us and giving us that perspective.
Thank you very much.
So that's, of course, the whole lowdown on the infrastructure space. You heard the minister, then you heard one of the premier companies. Now, another interesting company, Skipper Limited. It's a buzzing stock. Institutions are showing interest. We just read a recent report from Bank of America Merrill Lynch, wherein while they have not covered the share price, they're talking about how Skipper is transforming its business. There is backward integration, strategic plant locations, and some interesting business ventures as well. So talk about all of that with Devesh Bansal, Director of Skipper, joins us right now on the show. Thanks so much for joining in, Devesh. Really good having you. Now, we were just looking at the transmission tower players. Your market share in the power T&D business is about 15%. And a lot of people are now starting to look at you as a major player. What's the outlook on how the business will shape up for you? Do you plan to increase your market share substantially in the year ahead? Will you go at it slow? And how would the numbers look like for you as a company?
Hi, good morning. The market in India for the T&D space is definitely expanding substantially. The government's focus on this sector has really helped in the sector really look at very, very optimistic growth going forward. And Skipper obviously is one of the leaders in this sector, especially in the transmission space as well as in the distribution space. So our tower manufacturing capacity of close to about 2 lakh tons this year would make us one of the largest players in this industry. And looking at the bullishness of the sector, we are definitely very, very optimistic about seeing very high growth numbers going forward.
Challenge for the transmission sector is that there is only one large customer, and that happens to be power grid. Is that a challenge or is that an opportunity? Because when you're dealing with one large customer, if you deal well with that customer, that also is a gold mine.
Well, definitely Power Grid is the owner of most of the transmission utilities in the country, and but then with the introduction of private players into the bidding process, companies like Sterlite, companies like Adani, the market will see more and more large players coming in. But as a company, you're right, it might just sound a little risky to be focused on only one customer on the domestic front. So as a policy, the company ventured into the international space also quite a bit. And almost about 50% of our revenues this year in the T&D space is expected to come from international business in geographies as far apart as Latin America, parts of Europe, as well as Africa.
And that is where you have exposure, Devesh, Africa, Asia, as well as South America. Give us some more details in terms of which geography do you think is going to be contributing the maximum to your revenue size going forward?
At the moment, in the international space, one of our largest customer bases is in Latin America. And that's a market, much like India, is seeing very high investments into the infrastructure space, especially in the power infrastructure space. So we are very bullish about the Latin American market, as well as markets like Africa. But then, of course, Latin America would be less penetrated as compared to, let's say, an African market. So if we were to place our bets, we would definitely look at the Latin American market very, very bullishly going forward. But also that is not to take away too much from the African or the European markets.
If I look at what you've reported, the numbers for the first 9 months are out, so we can look back and say how FY16 has moved for you. You've done a growth of about 20% plus, which is much better than what you've guided. Earlier you'd guided for a growth of about 15 to 20%, you are growing at about 21 to 22%. So can I safely assume that for FY16 you will comfortably surpass your guidance?
The volume growth of the business has been in excess of 20% till now, and we actually expect that to be more or less consistent going forward. However, because of the falling commodity prices, wherein the prices are passed on to the end customers because of the escalation, de-escalation clauses that we have in our contracts, the value growth has been slightly lower than 20%. So the value growth might just depend on how the commodity prices play out in the future. But the good thing is that at least our margins are more or less protected irrespective of how the commodity prices move.
So, okay, so I have a couple of questions, Devesh. Firstly, on the plastic pipes business, and if I'm not wrong, while you've increased your capacity by 5x until FY15, from the current 12,500 tons, you're planning to take it up to 41,000 tons by the first quarter of FY17. Give me a timeline by when will this capacity be on stream, and does it mean a substantial increase for your top line because of this division?
So the plastic pipe business, specifically the PVC pipe business, is one of the areas where we are looking at very high growth in the future. We were at about 12,000 tons approximately of capacity till last year. Already in this year, we've added 3 more plants in Ahmedabad, in Secunderabad, near Delhi, as well as in Guwahati. And the 4th plant in Hyderabad is expected to be commissioned somewhere in April or May of the next financial year. That would take our capacity up to about 40,000 tons per annum. And definitely we are looking at extremely robust growth in this business going forward.
No, but the follow-up is the number there. You mentioning that your T&D business anyways is doing well. If your capacity is going up from 12.5 to 40 by the first quarter of FY17, would you believe that your overall consolidated top-line growth could be northwards of 20%, maybe as high as 25%, because both the divisions now start to kick in?
The capacity utilization in the first year of this capacity expansion that we just did might not be close to about 100%, which we were maintaining last year. So while our capacities will be close to about 40,000 tons, we don't expect it to be fully utilized in the coming year. So, but yes, there will definitely be a growth. There will be a lot of contribution coming from the PVC pipe business as well. I would still peg the overall number to be close to about 15 to 20% of growth, to be on the safer side, because PVC still now is it's still a smaller division of the company. I think almost about 85% of our revenues currently come from the T&D business. So while we enjoy a very good low base effect in the PVC business, we don't expect it to contribute in a substantial manner to the overall corporate number, at least in the coming year or so.
And you have sufficient cash on your books for all the new plants that you were just talking about? You wouldn't have to raise any funds?
Most of the expansion that we are doing is either from internal accruals or from debt. We don't have any plans of raising any fresh equity going forward.
FY16, FY16 has been a year of expansion, so your return ratios may not look strong. Also, this has been a year when commodity prices have adjusted very sharply, so it not be the best year to look at all the return ratios. Where do you see your return ratios will stabilize for FY17? Markets, they look for one particular aspect, which is capital allocation. So now that you've allocated capital, let's talk about return ratios.
The return on capital employed for the PVC business, of course, is extremely good, partly because of the asset-light strategy that the company has been following in this business, wherein we've invested less than 50% of capex as compared to greenfield projects if we had set them up. So most of our all the plants that we have set up in this year have been on asset-light model, wherein we have taken on leased infrastructure and only invested into the equipments and not into the land, building, and other basic infrastructure. So this is going to make the ROCs on our PVC business extremely attractive. The T&D business is not really, we're not looking at large capex plans on the T&D business as well. Most of the expansion there are also on a brownfield level, not on greenfield projects. So we do expect our ROCs to improve substantially as we go along.
Question from my end, Devesh. Your debt, I believe, is at 1 times. The debt equity is 1:1, if I'm not wrong. Will you look to maintain it? Because you've reduced it considerably from what it was.
Yeah. In the last 3 years, we've gone from a debt equity ratio of 2 to 1.7 to close to about 1.25 last year. And looking at the expansion of the company's business, as well as the expansion in our bottom lines over the last couple of years, and going forward, so we do expect its number to improve further.
Okay, good chatting with you, Mr. Bansal. Thanks much for taking the time out and speaking with us today. That's the view coming in from Skipper, and an extremely bullish sounding management with sound business prospects as well as revenue projection for the quarters ahead.
It ticks a lot of right boxes, quite frankly. Debt has come off, the free cash flow generation is great, the return on equity is not as bad, and the growth rates for both the businesses seem to be on track. So seems to be.
One thing I'm very confident and certain is that the entire transmission business will do extremely well in FY17. I mean, up until now, the entire T&D pocket or T&D vertical was resting on a particular buyer or a particular customer, which was Power Grid. But now private participation will kick in. Also, state electricity board, which have not been spending, they would be in a position to spend after the Uday scheme and after the Uday bonds, because the balance sheets for some of the state SEBs or state discoms would be strong. So that's one space where I see formidable uptick in orders, and that's one space where you will see a lot of action. Like FY16 has been a great year for road companies, irrespective of the market on the NCCs and the Sadbhavs of the world. They've done very well. For FY17, I mean, that real dark horse could be the entire transmission of the T&D stocks. They've corrected a lot, some of them. They are not at these, elevated valuations. Last year was bad for them because the top line got crushed because of decline in commodity prices. But now that commodity prices will stabilize, the top line may not look that sluggish.
Yeah, and the advantage is that the margins may actually look to be much better as well if the commodity prices stay behind.
Commodity prices and commodity stocks today, they're all holding up. So you've got a nice sizable list of metals movers which are topping the list. Hindustan Zinc, Hindalco, Vedanta, they're all looking extremely smart. And you could throw in a Torrent Pharma as well as Arcom also in there. Lupin, 4% down.